All right, you guys. I am back. Okay, so give me 1 second here. I am looking for my own videos. There you go. Right, that's me. Okay, let me put up some chat. All right, let's go. All right, feel free to chat yourself up. Kidding. All right, so it's 10 o'clock. I don't know how long I'm gonna be here for, so we will see. Now, oh shoot, I forgot what I put my title as. Hi, Michael. Howdy. What's up? How are you doing? Are you ready for Monday? I feel like every time we have like a weekend off, right? It's such a boring time. I can't wait until Monday trading session. But anyway, I hope you have a good weekend so far. Okay, am I too loud, or I think I'm okay. Okay. So I don't know what my show is going to be on. Like I have a topic in mind, but I just don't feel too well today. Not sure why though. Just woke up and felt, I don't know, just something. Either I'm too hungry or something. So I might be, getting off a bit early, but I'm shooting for an hour. So hopefully by 11 o'clock, I will be on my way. Okay. So again, just a heads up here. I was thinking about like, the certain things. Of course, I had some discussion last night about GameStop to somebody, personally close to me. And I'm like, so it's a brick wall. It seems like anytime I talk about GameStop, such a brick wall to me. It's great weekend. Hope yours was fine too. Of course, thank you. Yeah, so far so good. Like I said, it's such a boring time anytime there's a weekend for me, unless I have something planned. But this weekend was just me being lazy, just didn't want it to do anything at all. But sometime, hey, we need some rest here. But yeah, as far as like me enjoying my time, of course, it's a good weekend so far. Thank you for asking. But anyway, so let me go back to the anecdotal experience that I talked to, people in my personal life about GameStop. And now, of course, this person have been, getting into GameStop at a very good price, in my opinion, right? So the dollar cost average for this person is 25, right? 25, 26. That's pretty good, in my opinion, right? But it was such a challenge for me to kind of give this person a rundown on what this company has been doing. And of course, I'm sure they trust my analysis on the company. That's why they got in it, because of me, right? And so, yeah, I feel a sense of responsibility to tell everything about this company to this person. Of course, this person is pretty new to the investing. Investing in this type of company, right? It's challenging because they have this idea about how the company should be evaluated, right? And to me, we got stuck on the book value thing, and I think this is the topic of today. And I think that I don't know if I put the title on my live stream. I could go look at it later on, but it has to do with Google, right? When you Google certain terminology, certain things about this company, it seems like they don't give you the up to date, especially with the respect of book value, right? And so that's what the challenge was, is that this person trusts what Google says. And I'm like, okay, yes, that's correct, but it's not complete yet. So let me tell you what I mean by that. But before that, though, let's look at the price real quick here. Now, we're trading right now. We're closing at a pretty doji candle here. So the indecision is here. as far as the price movement, it doesn't want to go up nor coming down, right? So the buying pressure is pretty evident that around 22, there seems to be a support there. Now, I'm sure if you look back right here, there's some, historical price interaction around 22 as well. I'm sure if you go back even further, now this is a weekly. This one right here is when Ryan Cohen got in, right? Bought in around 22 or so right here. So this is the time when Ryan Cohen add to his position $10 million share, $10 million worth of GME share. That's good, right? And the fact that we're trading above that, so there might be another chance for people to get in at 24. Now, as far as a prediction, I don't know how low it might drop down to, but my eye is kind of looking at this gap fill right here. Does it have to fill within a week or so? Or it could be a year from now, who knows, right? But gaps usually fill pretty 80% of the time. But it's just a time frame, whether it's going to fill next week, 2 more days, or even 2 more months, who knows. But this price point, of course, if it ever got back to this, it's another best opportunity to add. And I don't think, again, can it come down to this price? Of course, anything could happen, in my opinion. I mean, $18 is a pretty good price point when it comes to with respect to book value, right? Of course, this company has been adding asset to their company already within this past 2 months. So realize that, and then you're not gonna be bogged down by what Google is telling you, right? Okay, so let me go to the meat and potato of this live stream here. Okay, so let's talk about Google real quick, right? So if you do any Googling here, right there. What's that? Got it. Okay, so if you were to Google, right? So this is what the discussion was all about. This is why it's such a hard discussion to tell. So because this person trusts this data, right? And when I said, hey, this is not completely accurate, it's fly off the handle. It's like it took me quite some time to tell this person, hey, it's not completely accurate. And then when I told the person the real book value, they were like, oh, why are you making up numbers? And I'm like, okay, let me show people. And just off chance, you might have people who are, getting into this company, didn't know anything about the company, didn't know about the dilution, but they heard about dilution, but they didn't know that this is not accounted for dilution yet, right? So let me kind of switch this back to my pane here, Blackboard. There we go. Okay. So hopefully you could see that one. But let me do some doodling here because I really think that it's important for people to know that Google sometimes don't give you the most recent data. Okay, so just know that, and you're saved the pain of not knowing about the company quite well here. And again, the name calling about, oh, you're just delusional and this is why you make things up and all that stuff. Like, no, I'm not trying to make things up here. Of course, any speculation, I would always tell you, hey, it's my own speculation, but if it's the actual number, of course, I'm going to tell you that this is not correct. Now, when people seeing this, that, okay, as if July 4th, this is not correct, right? Especially this particular, some site, they give different, like this one, for example, right? If you were to look at, as if July 2nd, which is the most recent one, if that's the truth, this number is wrong. this is not correct quite yet, right? Now, this number only account for book value of GME at the old, like as if April. Okay, so April 30th. That would be more accurate if you were to say as of April 30th. Now, what's wrong with this date right here? This date is more current. Well, why am I, telling you that? Now, this one, see, as of July 4th. So, as of July 4th, this is wrong. The book value or price to book ratio should not be at 5, should not be at 7. Oh, shoot. Okay, I think I got back, but anyway. So hopefully, but anyway, so the price action, yes, it fluctuates and all that stuff, but it should not be this much discrepancy. So I'm not going to do price to book. I'm just going to focus on the book value here because it's a lot more stable to find out, right? Because again, if the price fluctuate like crazy, this ratio is going to be skewed. The only thing that is not skewed is the book value per share. Okay, so all right. So for those of you who just trust Google saying that it's the most current data, I'm telling you it's not. So here's why. So we know that after they release that earnings report, right? So from April, hold on. Okay, so from April to the current date, right, which is July. Okay, from April to July, these two things happen. Okay, these two things happens. So that's the date in question here. Okay, so May, June doesn't include April. Okay, so if you were to take into account the fact that we raise, okay, this much money, and this is facts. I'm not making this number out of my ASS here, okay? So, and this is also filed. You could go to the SEC filing if you don't trust this article here or this particular statement. Go to the SEC filing and then find out for yourself. And the company actually make this money from dilution. Yes, they were diluting. But again, that dilution is going to give the company asset, right? So how do you account for the current book value? So current book value as of, I'm saying as of July 7th. Okay, this is even more current than July 4th, 3rd, or whatever, right? But even July 4th or 3rd or 4th or 2nd, right? Just like this article right here, or at least article. This particular statement here says it's wrong. Why? Because between these two months, right, we were able to raise at least $3 billion onto the company asset. So $3 billion plus, the asset for April. For that, how did I get the asset from April? Was Q1. From Q1 2024, we know that the company has shareholder equity of, it's very easy to verify here, okay? So go ahead, verify that number for me if you don't. And, do your own work too. Like, this is how you know that Google doesn't give you the most current data, okay? So 1.3. That's shareholder equity, right? So anytime if you do the Googling, right, if you trust Google again, if you Google how do they report shareholder equity? How do they report share offerings? Anytime the companies raise money from shareholder, where does that money go? Well, it goes towards the company asset, and usually it will be written on or added to shareholder equity. Okay, so that's why I use shareholder equity numbers. Now, if you want to verify it real quick, I could show you how I got 1.3. Okay, give it 1 second here. Right there. Okay, let me switch it back. If you see it right here, see, that is as if April, end of April, end of quarter one. Okay, now if you don't believe me, let's do quarterly right there. Boom. Shareholder equity is 1.3. So, okay, let me go back here. So when you do that math right there, and this is how you get to book value. Okay, book value accounted for shareholder equity divided by the outstanding share. Okay, number of shares. So when you do that math, I'm doing ballpark here, okay? So 3 billion plus 1, that means 4 billion. Okay? So you got $4 billion of book value. Hi, Manuel. Thank you for joining. So when you have that math, right? Again, this is as if July 7th. July 7th, book value is not, or price to book is not 7.8, but rather, how do I come up with better ratio than that? Well, 4 billion divided by the number of outstanding shares, right? So if you do that math, you should come out with at least $10. So let's just say, ballpark, right? It should be $10 or so. Again, rounding off, might get some cents out of there, right? But again, $10 per share book value. So how do you do price to book? Well, look at the current price right now. What is the current price? $24. Right? $24 per share divided by book value per share. $10. So easy math, 2.4. Price to book. So this statement right here is wrong. It's not up to date. So not even this one. It's not up to date. And so for people who trust the Google with their life, they are not going to see this number until 2 months from now. 2 months from now, you will see this. So the company's valuation right now, if you trust the Google with your life, okay, you will evaluate the company because we know that the company just raised $3 billion. Okay. And this is the challenge about telling people, hey, don't trust Google here. It's like, okay, all right, but the Google might not tell you certain things about this company that, hey, maybe there's a recent development that is within 2 months. So this particular statement, like I said, it's 2 months old and it's incorrect, right? Now, the correct statement would be, okay, if you want to use this 7.8, right, as a price to book, then do it on this date, right? Change this date to this. Then I would agree. Okay, sure. As of April, book value should be at this price, right? Now, the next earning, what is the next earnings? Hi, Sharon. Thank you. Happy Sunday. Okay, let's go back here. Now, I hope I explained that pretty clearly. I know I'm pretty bad at like trying to explain the right thing here. But, okay, so the next earnings report, of course, we don't know this quite yet. We have to kind of wait for the company to announce the real date here. But as if for now, September 4th, okay, it's not until the next earnings report that you will see the current book value, okay? And so the company would be more valuable now, or sorry, if you trust Google at the current time, right, and not even thinking about how, okay, this company might have done something within these 2 months that, again, like most people don't do their own calculation, right? And this is why this discussion is so, it takes me so much time to try to explain to these people that, hey, this person, that don't trust what Google says too much, right? And the pushback was, how dare you question Google? Everybody trusts Google. Okay. But at least, again, make sure that you know the current data, and then you'll understand why this company is more valuable than Google currently says it is. Okay. But again, you're not going to see that data until 2 months from now, because you have to do your own calculation to get to that valuation. Okay. Google is not going to do that valuation for you currently. Okay. Because they don't have the capacity, or at least perhaps it's not that Google is not smart. It's not that. I don't know if it's colluding or whatever. It's not that either. It's just that because of the current data of every quarter being reported, it just doesn't include the 2 months, 3 months that we have been, from April. It doesn't include May, June, July, recent development. So that's what I have the problem of explaining to this person that, 25 is actually a good price point to be like, even though, he's in the red, this person is in the red, one share, right? $1 a share. I told them, like, hey, this is a good price because it's actually 2.4 price to book value, right? It's not 7 point whatever book value or 5 whatever book value. No. But anyway, so that's the whole discussion that I have. But again, it's such a, you cannot escape, trying to explain the value of this company to people who haven't been, looking in depth in the balance sheets, getting involved in this company as long as I have. And most people who invest in this company too, who watch Marantz, realize the struggle that we have to and explain to these people that, hey, this company is actually has some value in this. The psychological attack from the media really does a lot of damage to this company. I really think that. And to me, again, I'm not bogged down by it at all. To me, that's an opportunity, right? And to me, it's a contrarian belief. And it's not based on non-facts. Of course, it's based on number, data, and all that facts, that I could muster myself, that I could do the pluses and minuses myself and come up with my own conclusion about the valuation of this company, right? And this is what I'm thankful for. It's the fact that I looked at this company balance sheet rather than listening to other people calculation, even Google too, right? I don't even trust Google at the moment, right? Because of that whole, the discussion. I understand, like, Google is a great tool to look back in the past, like past data, historical data. That's useful. But as far as like a most current data for any company, now I'm going to have to verify myself too. So I'm not going to just trust that number and then, just go by it. But think about it. If people were to trust But okay, hold on. Let me go back here. Okay. Think about it. Like if people were to trust this number right now, right? Instead, like 5, they would have think that, oh, GME is 5 times its book value now. It's over, or at least fair value, right? If you were to kind of compare to like Best Buy, for example, right? Because Best Buy is trading at 5 times its book value, a little bit over 5. And even for this one, this number right here, 7.8, they would have think that, oh, shoot, according to this website, GME is 7 times. So they are less likely to add more to their position, not knowing that at the current date, it's actually 2.4, meaning that the company is more valuable, meaning that when you buy at this price, 24, currently, you are buying into a 2.4 book value instead of 7.8 book value. Big difference here. Big difference. So this is multiple, okay, you guys? It's 5 times multiple here. So to me, that's important. It's an important number to tell people about this company. Now, again, this person is not, somebody who doesn't know how to evaluate the company. It's just that he used the metric of, okay, PE ratio and, evaluate the company based on factors in which they think it's the best for the company, high quality company, right? Now, I agree with some of the sentiment out there that the company, GME, has declined in top line revenue. There's no denying that, right? But to me, again, this top line revenue, it's just, we're in a transitioning mode, right? Of course, we're going to do everything we can to at least stay afloat right here, right? So we cut not to cripple the company. No. Not to stunt the growth of the company. No. We cut because there's not enough demand out there for us to have this massive amount of revenue, right? And on top of that, we cut because we're trying to achieve profitability at the cost of growth for now. For now, again, like it's just temporarily. It's not like we're just going to continue to decline 50%, 15% every single quarter or every single time, 30% every time. No. It's not that. And again, so this quarter right here, and just keep in mind as well. So the first quarter, we have not include anything to do with the trading card right now, right? If you look at oh shoot, let me switch back. If you look at right here, sorry. Okay, so top line revenue. If you look at the top line revenue here, I was talking about that one, but we're trying to achieve net income positive, right? To me, this is a much better metric to go by. Any company that makes massive amount of money, but net income negative, that's not a good company to be in my opinion, right? Because they're burning cash for the company asset. And so in order to, have a top line revenue of $9 billion versus $4 billion or $5 billion a year. But, when push come to shove, you don't get any money left over. And so to me, that is not a good company. Good company actually have good profit right here. Right? So slowly, of course, if you're going to say, oh, $25 million is nothing. Okay, what is it? How much is it? I thought we're only going to make $6 million a year just a quarter ago. And so if you do the calculation, obviously, now if I go back here, of course, you've seen this one before. This number is very important to kind of ponder. Of course, this is just my projection here, right? Based on the data that I see so far. Not sure about the top line revenue. I'm not going to try to guess, but my hope is that we're going to be able to beat the estimate here. Okay. So let's look at the estimate real quick. What are the estimate right here? Wall Street estimation that we're going to come out at $895 million. Can we beat that? I don't know. I mean, quarter two, historically, if you were to look at the previous year right here, what is that? So let's see if I could do the math here. If I were to subtract this one by the estimate, 29.9, see what we got here. So that's a difference of 269 divided by this one. So what is that decline there? I want to find out the percentage of decline for that. So it's 23% decline. So that's the estimate that they think that we are going to come to that. If you compare this right here, expenses. Wait, hold on. Operating expense from last quarter, right? The second quarter, it might be less. So this is why I got the 275. Of course, this is my projection here, speculation, right? Based on, this decrease from here to here. What is that? $20 million or so. That's why I just subtract 20 million right there. And so if the estimated data or estimated, what can we do there? So how do we find out? I forgot how to do the gross income from that. So cost of good, obviously you need to subtract that from there. So from here to here, that's around 90 million. So if you were to subtract that from 90 million, what is that? 90 million. Sorry, you guys, I'm just playing with numbers here. So let's try that and see if this subtracted by this. What is that? Gross profit. Is that possible? I mean, if we come at this particular price point, we're going to exceed the operational cost here. So the operational income would be, that would be fun, right? That would be fun to see. $72 million. Okay. Now, if we're able to do that, again, this is just an estimate, right? Based on just a quick math here, right? Just straight up. If they think that we're going to come down 28%, right? We could also deduce the same rate of change here. So if you do the rate of change from here to here, there you go. That's how I got to that number. Okay, you guys? Speculation here, assumption, a lot of assumption here. It's not based on reality, okay? Right? So assumption means that you make an ass of you and me, right? That's the whole saying there. So, but anyway, just think about that real quick. Now, if that's the case, then we are going to be, now, the reason why I did this one is because of the marketable security, $3 billion in marketable security, assuming that they're not using that money to buy any other company yet, right? Again, a lot of assumption here. And so, net income should be around whatever this is, difference, okay? Now, negative mean actually plus, okay? Because you're receiving interest income, not expenses. So that's why it's expressed in negative. So the correct way of looking at that is, man, I don't think I'm correct on this, but it's like, can you imagine per quarter we're gonna come out at $100 million a quarter? Oh man, that's gonna be crazy. Is it possible? Again, anything is possible unless they're adding to the inventory, in quarter two to try to kind of beef up for the next quarter, in which case cost of revenue is going to increase a little bit instead of decreasing. So that is also possible. So let's say we increase cost of revenue. Instead of decrease. So let's say we increase by, instead of negative, let's do positive $10 million. All right, let's go crazy here. In which case, gross income, obviously. Okay, hold on. Yeah, gross income would come out to be, again, assuming that we come flat on the revenue side, not losing any more or, decreasing as much. Even then, though, we're going to be able to come ahead $13 million. Okay. So now this is not trailing 12, sorry, a quarter per quarter. I should change that. Quarter two estimate. Boom. So, worst case scenario, we had a higher cost of revenue, $10 million more versus next quarter, which is not in line with this at all. But again, I'm just playing with numbers here, you guys. So if that's the case, we're coming out positive still, right? Even then, like, can this be realistic? Of course, this number could be realistic because last quarter, there we go. We were only $2 million in the negative. It's pretty easy to deduce that, hey, because now we have a better revenue stream, right? The trading cards and all that stuff. Hopefully you understood that one. And the Mod Retro, being a distributor, the exclusive partner for distributing that Game Boy that coming out. It's pretty cool, if you look at, hold on, let me see. I think it was on, yeah. Mod Retro. See if it, yeah. So this type of thing, again, I wouldn't buy it. Of course, like, to me, $200 is pretty a steep price for me to get into this. But yeah, people are gonna snatch this like crazy because, people want some headset device or handset device to play games. And you don't need to wait for anything, just charge the battery and it's ready to go. Yeah, I remember growing up playing this on my phone, those little game on the phone there. But I remember, seeing this. Of course, I couldn't afford it at the time because wasn't growing up rich or anything. So, but anyway, so with the new revenue streams and everything, this is a low ballpark here, assuming that we're going to increase the cost of revenue here and that we're not beating the revenue, right? A lot of assumption here. Again, don't take this number and run with it. This one as well. I mean, think about it. If we only come out $20 million, then this would increase by that as well. So this is per quarter. And let's say we come up ahead, which I think this is also a more realistic price point right here. We would be able to come ahead at around $90 million. Okay. 90, with 90 or 9? Okay. Let me kind of do this. See if it. I'm trying to do a trailing 12 here. So trailing 12, actually 70 million. So even then, like, it's still a plus. So the only way that we're coming negative on the next trailing 12, if we lose more than $60 million or $30 million, right? Which I don't, like, it's hard for me to assume that GME is going to lose 30 million or whatever. right? Unless they do an acquisition and that company just tank immediately. Who knows, right? That's another speculation too. They might do some acquisition later. So, okay, let's see. I know. Is anybody bored yet? I'm sorry. My show is such a boring. But hey, sometimes you need some boring people around, right? Trying to keep people grounded a little bit here to try to tame people, keep people zen on Monday if they're too excited and then buy call option and all that stuff and, lose a whole bunch of money, but at least accumulate some shares instead, huh? But anyway, sorry, deviation. Okay, so for Zacks, now Zacks, research or whatever, they do have upgraded GameStop to hold. So from sell to hold, right? Of course, at some point it was a buy. At one point, I think when Jimmy was at 15 or 12 or 11, I remember covering it and it was a buy. So it should be. I'm sure, again, they say as if July 5th, they want you to hold this company for now, right? So perhaps they are just valuating this company at the current book value or using the fact that it's 5 times its book value. So I suspect that the reason why it's not a buy now is because they use $4 as the book value instead of $10 as the book value. Okay, so to me, this is not up to date either, but I can't verify that unless they tell me, hey, book value is this, book value is 2.4, for example, and then it's still a whole. Then, okay, this is accurate, sure. But of course, this is just analysis based on their own. Oh, there you go. Okay, so it seems like they're still using the book value of $4.27. So therefore, this one right here, if the price is still at $24 by the time they report the new, by September, when they report the second quarter number, then this is it might change to buy. Okay. Again, it depends on the price action. The price action of GME is pretty wild. So just know that. That's why this thing fluctuate like crazy. Now, book value for Zach right now, they're still using the old one. Okay. So it should be skyrocketing to $10 a share. Next earning report. Hi, Be More. No, I actually love spreadsheet. Okay, good. Thank you. That makes me feel better though. Thank you. Okay, so let's see. Of course, like this headline, again, for people who are new to this company, they might believe all of this stuff, right? And people who are trying to evaluate the company, they might trust this data way too much, right? Google never lies to them. If you trust the Google with your life, you're not going to know that GME actually has better book value today. You might have to wait 2 more months before you know that, right? So again, this is why I feel like this is such an opportunity, because nobody knows this yet, right? And most people out there, they're so lazy. They don't want to do their own work, right? They would just trust Google. It's like, okay, of course, Google is not going to lie to me. Therefore, they trust that number. And so the valuation for them is skewed because they're like, oh my God, this is too expensive for me. So 2 months from now, by the time they get that new data, we already knew that this is a good price to buy. And that is to me, this is the risk reward, right? It's rewarding for you to know the piece of information that the rest of the world hasn't gotten their hands into yet, right? Unless you're following this company like a hog, you would not know this. And the news media is not going to tell you. The news will pound on this facts right here. The news will make you believe that this company is shit. They've been trying since over here. Right? They've been trying since over here. They've been trying since over here. Right? A year ago, we were losing $100 million. Now we're making, now we're profitable. Remember, when we're losing $100 million on the net income, what was the news then? Oh, they never be profitable. They can't cut themselves, or they can't cut the stores to profitability. You can't do that. You have to expand, right? That's what the narrative was. But here we go. We cut store, we cut revenue, but yet we're net income positive. Why? Are these the dumb CEO that people are telling you about? That the media would love you to think otherwise, right? And again, all of these, like this terminology, meme stock, that's just a terminology, you guys, psychologically, to tell people who are actually trying to evaluate the company correctly, to make them feel like they're conspiracy theorist minded. It's like, how dare you say that GameStop is valuable? Okay. How dare you questioning, the valuation that Google is telling you? Okay. Well, actually, you just need to do your own math for a little bit, right? And that's why I told this person, I was like, look, you're not going to believe me until 2 months from now. 2 months from now, you're going to see that the book value is $10 per share. Okay? So if you know that facts, you would feel so secure that the cost average for this person is only $25 a share, right? And think about that too. For people who bought, okay, before the dilution, right here. Keep in mind, if you're lucky enough to buy GME at $10, okay, which I grabbed many shares, okay? And I'm so lucky too that I got a huge settlement around here. So this is why, I was able to kind of like gobble up and dollar cost averaging down my my whole position here. So I'm happy when you buy it from here. Oh, okay, hold on. Did I? Okay, sorry. When you buy it from here, you actually bought the company 100% equity, right? Why 100%? Well, assuming you're holding, you're not selling up here, right? Of course, if you sell at 80, obviously you're going to get 80 times or 8 times your money back. But assuming that you hold through all of that, if you buy at this price point, you got 100% equity. If you buy here, right, 100% just means that one price to book, 1-to-1 cash. And if you buy it here currently, you get around a little bit under 50%, right? So this person that I'm talking to got around 45% equity for his share. So again, the valuation is skewed based on the data that you know about this company, and so it's important for you to at least know the current valuation here. And again, I keep honing on that facts because it's it's such a long discussion when I talk to this person. And again, people who used to evaluate the company the way that quote unquote Wall Street does it, to me it's skewed, right? And my point that I wanted to kind of hone on for people to understand is that sometimes these analysts, they are either skewed themselves. You see this person right here? I've shown this before. Wedbush, right? At any point in time, do you see any update from sell to hold, right? From here to here, it should be hold, right? It should be like at least these two instant here. It's like, why sell and not hold at this price, right? Now, maybe the GME never got to $6. Maybe that's why, or anywhere close to $6. But how do you increase from 6 to 7 and then now to 11, right? If you never tell people to buy, how can they sell it at $11? So that's what I'm baffled about, these analysts out there. They are skewed themselves. They are biased themselves. Either they are short themselves, or they have somebody that they work for who are short themselves, who are shorting the GameStop, and they're paid to put out all this analysis on the company. And again, this is why I try to, at least have my own assessment on things, have my own data on things. Now, of course, it's not me making up things here. I'm just saying that I follow the company pretty closely to know the most current data. Let's see. If you look at the industry, so let's look at this real quick here. Now, we used to be on number 11. Currently, we have a higher market cap here. So we're actually rising to number 9 in terms of specialty retailer. So who are we trying to beat here? Of course, Best Buy is always the target here, right? So we need double valuation there. Now, again, I pointed this out before, but just to show you where I get that, understand that price to book for Best Buy right now is right here, 5 times its book value, right? So if GME were to trade the same way, and I use $10 per share book value after that dilution, okay, the 2 dilution that we had, then we should be around $50, right? So let's just round it off to $50. $50 a share, okay? And again, if this thing is correct, you would see, okay, so this one is correct right here. When they say, as if April, right? From April on, we were $4 a share, okay? Hence, today's book value, okay, is this one. Now, this is more accurate than this one right here. But for some reason, this get to pushed out to people. Now, people who trust Google with their life would look at this one and not even verifying it themselves, right? And so is that the website is trying to manipulate people to think differently? I don't know. Again, I'm just showing you what I see here, my own eyes. And the source of argument sometimes is that the company is not as valuable. And that's why it's such a hard time for me to tell people who are, again, thinking about investing in the company, to look at it in a different light. Anyway, so let's go to my strategy here. Of course, I'm gonna, it's around 11 o'clock already here. That's why I use Browse. Oh, okay, Brave Browser. Is that a better data coming in? I've heard about that before. Maybe I should start using that and see. Do you see any discrepancy if you were to use Brave Browser right now to find out the current one? It's like, I'm curious to see, if you do like the current book value of GME after dilution, I wonder what they would say there. Yeah. If they give a more accurate, more up-to-date data, that would be amazing, right? So that would be because this person, when I talk to the person that I'm trying to convince that, hey, Jimmy is actually a good buy currently, he was saying, unless you could prove to me that Google says 2.5 or 2.4, he would not believe it yet. So currently, he would go by this book value here, price to book value, $5 a share, or $5, 5 times its book value. And so, the challenge for me is to prove to him, that he's not going to see it from Google yet. You have to go out and seek those numbers yourself and do this work right here, right there. The work that I just did, you have to do it yourself because Google is not going to do it until 2 months from now. Okay, so SAS is a top result. Okay. Yeah, so is that a confirmation? Is it safe for me to say that Google is colluding with all short seller too? Or somebody paid for this particular thread to show up first, rather than something that is more positive or at least more in line with reality. Okay, so they show $5 a share. $5. I'm sure $5. Then that means they're probably just including the first dilution. So second dilution has not included yet. I bet that's why it's 5. Yeah, I wonder why they don't include the second dilution yet. It's so weird to me. Maybe another week. Maybe I'll check back to another week to see what it is. Of course, with different calculation, right? Unless they show you the work where they get that number from. I'll be curious to see. It's like this particular thing here. It's $6 a share. Now, my own calculation here, when I do the dilution here, I get 6 points after the first dilution, sorry. So after the first dilution, I got 6.47 right there. So after the second dilution, we get from 6.47 to 10.42. This number right here I use from shareholder equity. Okay, so like, let me show you again here. For Gamestop. Goodness gracious. All right. So right there. So I use that number. Okay. Let's see. So SAS here, it's a whole, but again, it's a whole. So I'm sure if they increase their book value here to $10 a share, this would be a buy, right? Assuming that Jimmy is going to stay flat for a while. And then they have it over here. It depends on what's happening. Book value, what other ones? Yeah, not much there. All right, guys. I think I'm kind of maxed out on my kind of brain power here. Let's just end you guys' misery right now, so you don't have to listen to me anymore. But anyway, so thank you so much for joining in and, go through this agony. But I hope I teach you guys something, right? Not to kind of trust everything that Google is telling you. I know AI is intelligent, artificial intelligent, but it's not that much intelligent unless you want to seek out, at least pretty most current reporting on the company. So yeah, take that as an opportunity to, to at least now that Gmail is more valuable than Google is telling you right now. Based on the delusion. So, all right. All right. Let me sign out. But yeah, thank you, Jesus. Appreciate you.